Hello and welcome to TA for Traders. It is Wednesday the 10th of January. In this video we're going to look at the charts on the US dollar versus the Japanese yen. Now the dollar's had a bad couple of days. It's fallen. What we'll see from the charts is that it's in a downtrend. It's fallen below moving averages. They are now becoming negative, and one would expect the dollar to fall to the lower boundary of the present downtrend channel, which will be at, watch the video and see. Right, I've forgotten to make the screen bigger again, and again I'm on the wrong chart. So here we go. So here we are looking at the US dollar versus the Japanese yen, and we're on a weekly chart, so each candle represents 1 week's trade. What you can see is that we're in this downtrend. It's more visible on the daily, but you can be rest assured we are in a downtrend. We're getting this pattern of lower highs, and you can see that the downtrend channel would take us a lot lower. We're still towards the top middle range of the downtrend channel. On this weekly chart, you can see we've fallen below the red line, which is the 200. That should have given support. It was moving up. It did give support for 3-4 weeks through December, but we've now fallen below it. We've also fallen below the 20-week, which is moving up as well. Should have given support. And we're now moving below the 50-week. Now the 50-week is still moving downwards. Therefore, if we go below it, that will give a downside push. So be aware of that. On the RSI, it's presently down at 48.3. So it's below 50. You can see it's in a downtrend itself, a shallow downtrend indicating negative momentum. And that's confirmed as the MACD. The short term has now moved below the longer term, although they are just marginally above the zero. Okay, moving on to the daily. So here each candle represents 1 day's trade. Now from this you can definitely see the downtrend pattern. We've got this pattern of lower highs. So you could draw a line through that, then draw a line through the lower. You can see the pattern here of lower lows. That would give a lower boundary at the 110.5 level. So that's the lower boundary. Really, if we're in this downtrend, one would expect us to go down and test that. The moving averages are very interesting on the daily picture. You can see that the 20 is just crossing the 50. In fact, they're at identical levels at the moment, 112.84. So that will happen tomorrow. That's called a bearish cross, and is a negative factor. It means that if we get a rally towards that 112.84 level, there will be significant resistance. Everyone will be looking at that level as a selling level, and it'd be be a big surprise if we push through it immediately. To the downside, you can see that there is support from the 200-day moving average, which is this red line. That's presently 111.72. You can see that we're trading around that level at the moment, 111.62. So we've gone below it, which is bearish, but we're still only, we're not even midday yet for today's trading. So this final bar could end up above it. So let's just wait and see. But a close below would be another bearish sign. Momentum is negative. You can see that the RSI is in a downtrend again. 37.15 the present reading, so below the 50, and the MACD short term has just gone below zero, tracking below the longer term, and that is shouting out as a dollar sell signal as well. Moving on to the 4-hour chart. Here you can see the moving averages are all moving down. The 200, which was the last to turn, obviously, did give support but subsided yesterday. We're going to get bearish crosses as the 20 is going to cross the 50 and the 200 probably tomorrow. The day after, we're going to get the 50 crossing the 200. So they're all bearish signs and mean that if we do get a dollar rally, that it will have significant resistance from those moving averages. Again, MACD and RSI indicative of solid downside momentum. RSI presently 28.6. Okay, looking at the support and resistance levels. There's resistance 112.84. As I said, that's the level of both the 20 and the 50-day moving averages. Then there's resistance from the high of the 8th of Jan, 113.39, with support coming in from the low of the 25th of September. We're very close to that level. That's 111.47. Below there, we've got support at 27th of November's low, 110.84. And then obviously below there, we've got the support from the lower boundary of the downtrend channel, 110.5, which it's looking like the index is going to go down to that level. Anyway, the key takeaways from the video are that US dollar, Japanese yen is in a downtrend. Looks like the supports are to be tested. Moving averages are negative. They're all creating bearish crosses. It's got downside momentum and that lower boundary is at 110.5. Many thanks for watching the video. I hope you found it of interest. Please remember the videos I do on YouTube are for information only and they are not an investment recommendation. Please read the disclaimer.